All right. Not too much change from yesterday, so this should be quick, but every day that goes by, we always learn something, so I'm going to highlight the differences from yesterday's analysis today. So quickly looking at SPY, we were up 0.25% and we did bounce off the rising 20 daily moving average, and remember the bulls need to hold this support at 436, otherwise we are at risk of this double top rejection, and the neckline is down here right around 431 or the critical support right around 429. As long as the bulls hold support at 436, all is fine and well because we still do have the bull trend, and the bulls need to break out to a higher high to invalidate the double top, and the critical resistance is right around 443. So it's very simple right now on SPY. It's 436 to 443. Whoever breaks that range first is likely going to win this battle, and the bears need to break down below 436 and the bulls need to break out above 443, and it is still a bull trend while we're above 436. Now jumping over to the NASDAQ 100 triple Qs, today we did learn something different in the triple Qs, and while we are holding up above the rising 20 daily moving average and that critical support at 365, there is a subtle difference with today's price action, and we have to jump over to the hourly chart to see it. And it is now that we do have an official downtrend on the hourly chart because we did get an hourly closing lower low, and we've only been forming hourly closing lower highs. And that is what defines a bear trend if you're looking at price action alone. So watch that hourly chart because the bulls now need to prove they can break out to a higher high, which is very similar to what we're looking at in SPY. And on the triple Qs, that higher high is going to be the close above 371 to 372. So on the Qs, you're watching for support now between 365 and the resistance at 372. And whoever breaks that range first is likely going to be the winner of this battle. Below 365, we have the double top look that could bring us back down to the neckline at 357 and the critical support at 355. On the Dow Jones, we were up 0.64% and we did bounce off of the rising 50 EMA, but we're still below all the other moving averages, and we do have negative slopes on the 5 and the 13, so we need to break that resistance at 340, and if we do, we should fill the gap above 342. So pay attention to that resistance at 340, and if we break through it, look for the gap fill above. But again, a lot of these are still looking relatively bearish with the lower high or double top look. So if we do break critical support between 336 and 337, I do expect to see impulsive selling that easily gets us down to 330 or lower. On the Russell 2000 IWM ETF, we're up 1.71% today, and we are continuing that bullish look off of the bounce, off of the critical support, which was down at 180, from the bottom of the Bollinger Band all the way back up to critical resistance at 188. So while this did look like a double top potential look, we never broke down through the neckline at 180, and now we're back to the double top, which could still be a triple top. However, if we get the break of 188, we're going to get a short squeeze. Above 188, I'm looking for a push to 195 or higher. However, wait for the price action to confirm that breakout and make sure it's a confirmed breakout, because if we break through it and then come right back down, it could have been a false breakout, and it's still possible this turns into a double or triple top. Now, I did make a video on the weekly chart of IWM, and I explained why it was ready to run and why the technicals were bullish. So none of this move is surprising me at all, and this is exactly what we were looking for. We simply just need that last confirmation of the break above 188. Critical downside support will be that break above 185, and if we break back down below 185, it's still possible to retest critical support at 180. On the VIX, we were up 1.62% today, so the VIX did go higher, even though the rest of the indices went higher as well, and typically they're going to move inverse of each other. And also pay attention that the VIX is still riding that upper Bollinger Band, and the only reason it's struggling to go higher is because it's outside the upper Bollinger Band, and those bands are now expanding. So I'm not changing anything I've said. I still think the VIX is going to spike by middle of July in this zone between 18 and 20, and I think that is going to put downward pressure and further pullback in the indices. Doesn't guarantee I'm correct, but that's what I'm expecting. And right now, if we see the VIX crushing back down below 15 and then coming back down to these lower levels around 13, we are likely going to continue into that bull trend and invalidate a lot of these double tops. On Bitcoin, we're currently up over 2% and we are getting some increased volume, but we are still within the bull flag. So this is one of those areas where we are at the rising 20 daily moving average in a bull trend, and the bull stepped in. So there's really no surprise here, but we really shouldn't be getting bullish until we get the break out of the bull flag, which is going to require a break above 31,000. Above 31,000, we should start to run towards 35,000. You can stay bullish as long as we're above 29,500 or the breakout at 28,000. And then on Apple stock, we were down 1.09% today, and Apple did break that support at 190, but it's now holding support at the rising 20 daily moving average. But I still stand behind what I said. I think below 190 will come all the way back down to 185. So below 190, there's really no reason to be bullish. But if we break back over 190, then you can instantly get more bullish. And then we could either retest the previous high at 194 or hit that price target above 197. So jumping back over the S&P 500, the VIX is still climbing, which tells us there's still fear rising in this market, and we could instantly get an elevator down because we do have these double top looks, and the bears do like to take the elevator down, so it could happen at any point. So don't necessarily be fearful, just have a plan that if we break through critical support, you're at least prepared for it and you know how to react. These are still bull trends and we're still holding critical support, so I'm not sounding the alarm just yet, but if we lose these critical support zones, you need to be ready to act. And you either need to reduce your risk or you need to have a plan to start shorting the market. So as I always say, let the trend and the price action do all the talking and be prepared for any scenario and always manage your risk, and you're going to do just fine in this market. Don't forget to take advantage of that 50% off 1 month of bank trade alerts or the Stocks Channel Discord server. All you need to do is apply the coupon code FREEDOM at checkout, and you can find out more information on how to do that by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.